Well, fairly muted action with 10-year Treasury futures, given the highlight of the week being the beginning of Jerome Powell's semi-annual address to Congress. All that to say, we did see just about a 4.5 basis point range. Yields open up about 2.664, futures low, which would be the high yield of 2.671, and the low yield of 2.627. Definitely within reason of what we've seen over the past 10 to 15 days of 3.5 to 4.5 basis point ranges. Powell's address today didn't do a whole lot to the outright yield to tens. 10 yields were down a little bit before. The response was fairly muted, although it did have a little bit more implication on the front end of the curve and the flattening of the curve altogether. That said, five-day performance for 10-year futures implied yield of down 3 basis points, 1 month down 13 basis points, and year-to-date yields are down 5 basis points. Overnight was actually mixed to a little bit above average, about 107% of the 10-day average. However, tens took about 32% of the overnight volume, which is about in line of what we've seen over the last 10 days. When it comes to other news other than the FOMC meeting today, housing number came out poor and housing numbers continue to be poor. Case-Shiller number for December also underwhelmed expectations. However, on the plus side, consumer confidence number that came out this morning actually beat expectations by quite a bit. Right now, traders are getting very frustrated as tens continue to trade in that 15 to 20 basis point range and are hoping that this week's GDP number will do something to alter the narrative for 10-year Treasury future trading.